Good evening, everyone. Welcome to another beautiful Live with Lloyd. I am your host, astronumerologist Lloyd Strayhorn. On this Wednesday, it is the very first day of February. It's amazing how either I'm getting older, time is getting by faster, or maybe it's a little both. Who knows? But anyway, I do want to wish King Simon happy birthday today. But as you see, I have two insurance experts that's going to be in. So today won't be so much about readings as so much about asking questions about an instrument, as it's called or referred to in the business, that tends to be misunderstood. And so what I wanted to do is get two authoritative figures to demystify, to correct you in terms of the importance of life insurance. Next Monday and Tuesday of next week, February the 6th and 8th, I'm going to have two people who all they're going to do is just do readings throughout. So my thing is just bear with us. I think this is a very important part. I used to actually sell life insurance, so I can relate to this. And so what you want to do is make sure, if nothing else, folks, that you too understand the importance of this instrument. And so if you got questions, fine. Readings, no, not today. Don't worry about that, but we will get back to it. And hi, everybody. I'm astronumerologist Lloyd Strayhorn. Before I bring Jackie and Ethan on, let me tell you about the forecast for today. All right, it is Monday. It is a brand new day, a brand new month. About February 1st of 2023, the sun is in Aquarius, the moon is in Cancer, and it's a 9 universal month, a 1 universal week, a 1 universal day. And if you're a Leo, Aquarius, or Aries, you do well. Or if you're born on the 1st, the 4th, the 10th, 13th, 19th, 22nd, 28th, and 31st. I keep forgetting. Please share, like, and subscribe, or please like, share, and subscribe, whichever your choice. Hit the bell wherever the bell is. And I thank you very, very much for that. So now, without further ado, I do want to bring on my guest. And there's one that I'm going to be talking about later on that's very, very important. But anyway, here we go. Hey,
Hello.
Jackie. Hey,
Hi, Lloyd.
Ethan. How you doing, buddy?
Very good, thank you.
Very, very good. You know, it's interesting. I'm going to talk about that beautiful lady at the end of the show. But in the meantime, you have in the background plan well to live well. What do you mean?
Well, that's a new show that Ethan and I are going to launch this coming Friday. We're going to
Uh-huh.
talk we're going to talk all the things about planning, all the things about how you can live well. There's going to be a myriad of topics that we're going to talk about on our show. We're going to have special guests on our show that'll be subject matter experts, and we're going to demystify some of the things that folks tend to stumble through in this life, and they don't have to. We're going to educate, we're going to inform, and most importantly, we're going to have fun while we're doing it.
You know, there used to be a saying, if you fail to plan, no, if you don't have a plan, then you plan to fail. I forgot it's a play on the words. You either
That's right.
plan to fail, if you fail to plan, you fail, well, whatever it is. Y'all know what I'm talking about.
I know exactly what you're talking about, Lloyd.
Yeah. But you got a plan. That's the
That's
important
right.
thing. Okay, how did you two get together in the first place to sell insurance?
I started out as a client of Ethan.
Really?
That's right.
Okay.
I was a client. My brother was his client. Um, and then I decided one day I wanted to change careers. And I gave him a call and I said, hey, I want to see what this insurance thing is all about. And then the rest is history.
All right. Good. Because
We've been together for what? For about 5 or 6 years now. And
really,
and then you asked Jackie, how we came about this show. We were sitting in the office and we said, what can we do that's educational, informative, and fun? And I said, we should do some type of show. And she said, oh my God, I'm thinking the same thing. It was just like, it just had to happen. I mean, we were both thinking the same thing, and then it just kind of came out.
Yeah, in other words, you guys were just on the same page. And then now let me ask you this, Ethan. How did you get into the insurance business?
So I've been in the insurance business for almost 15 years. I spent a decade before in lending and real estate. And when actually was in lending and real estate at a fairly young age, probably in my early 20s into my early 30s. And as a lot of people know, in 2008, there was a collapse of the lending and real estate market.
Yeah. Yeah.
I was certainly still working, but the landscape had changed so much that it affected how I could support my family.
Mm-hmm.
And I made a conscious decision. I remember sitting at work, doing my trade at the time, which was lending, and I got a call and said, "Hey, are you interested to do insurance?" I said, "Hey, I own a house, I have a car, I know what insurance is." I said, "No. We're talking about retirement insurance." I said, "Retirement insurance? What is retirement insurance?" And at the time, of course, I understand what it means, but I didn't understand what that meant. And they said, "You don't understand. There are 10,000 people a day retiring, and they need help." And I'm thinking, "Oh my God, well, that's my parents, and that's my in-laws." And I never looked back, because what was interesting is when I was doing the lending, the way I was doing lending, I was basically behind a desk on a phone. And certainly I enjoyed that. But then when I got out to do insurance, I realized it's very personal. Retirement is very personal. And I started doing a lot of face-to-face with customers. And I started seeing how these products help them. And I just really never looked back. And 15 years later, I'm still loving it, because I really see face to face how these products, these instruments, help people.
Question: what are some of the myths that people have that cause them to be so reluctant about purchasing insurance, yet it can be a valuable instrument once understood? What do you think some of the myths are behind the resistance to purchasing instruments that you can protect your whole family? You can protect yourself.
That's right. It could be the cost. Some folks think that the cost of insurance, I can't afford it for the dollar amount that I may be interested in. You want to go ahead?
Yeah, I mean, there's so many factors. Obviously, cost plays a big role in people's decisions to buy insurance, because we buy. The law says we have to have car insurance. The mortgage company says we have to have home insurance. People really need their health insurance. So at the end of the day, a lot of people could be insurance poor, because dental insurance, car insurance, home insurance, vision insurance, health insurance. And so cost is a big factor. But I also believe it's education, it's knowledge, it's understanding, because use the word instruments. There are thousands of instruments out there, and we're licensed. And you mentioned to your guest that you were licensed. We have to go through all this education and continuing education, but the consumer sometimes can purchase insurance on the phone, over the internet, through the mail. They're not necessarily understanding what they're always buying, and sometimes there's could be that anger that they got screwed, if that they purchased the wrong thing, or something happened to my parents. If I can share this, when I got into the business, my parents were just about to retire. It was an interesting time thing, and I got into retirement insurance. And I said, "Hey, Mom, Dad, where's your life insurance?" They said, "Well, what do you mean? We don't have it." I'm like, "What do you mean you don't have it? Where did it go?" "Well, when we were, about your age, 30, 40 years old, we purchased this insurance. It was $12 a month. And then when we turned 60, it expired." I'm like, "Well, what do you mean? What do you mean?" And realizing at the time that my parents had bought a 20-year term insurance policy.
I was going to say that sounds like a term insurance policy.
And they were so upset that if I wasn't in the business, they wouldn't even consider it again, because they felt like they were bamboozled, because nobody told them, or maybe they didn't understand, which is what I believe, that this thing would expire on them. And they basically lost the trust, and its trust is a big turnoff for some people as well.
Well, Jackie said something very interesting just before you, mentioning the fact that it all depends on the cost. But what people don't realize, it all depends on your age, in addition to the cost and the amount, because the longer you wait, the more it's going to cost you money. Can you, either of you two, explain that, please?
So not only is it the cost, so the other factor to consider is your health. So for example, the cost of insurance, and I'm just going to use for the example of a $10,000 life policy for someone that's the age of 15 versus $10,000 for someone that's in retirement age at 65. So it's the same face amount or the death benefit of $10,000, but it's the age difference and if you're a male versus a female. So women outlive the men. So in most cases, the cost of insurance for a female is less expensive than for a male.
You know, that was one of my questions, Jackie, that you answered before I got a chance to ask
Yep.
you. Why are women's insurance for automobiles? Why is their insurance for life insurance cheaper? I know it ain't because y'all look good and smell good. I know it's got to be something more than that, right?
That's right. It's we live longer and the
They're
likelihood
safer.
and we're safer. That's right.
That is true.
They're
That is true.
wiser. They're safer and they're wiser. And you know, if I can talk a little bit about the age, you know, we come across a lot of age groups, and a very common myth, I think, is this trust factor. Whereas I would get a call from a customer and would say, Ethan, why is my life insurance so expensive? I saw a commercial that I could get $500,000 for $20, and I said to him, I don't recall the name, but I said, well, did you look carefully? Did it say that in small print you have to be a 35-year-old male?
Yeah,
And
yeah.
but you are a 62-year-old male. It is not $25 for you because of age. You know, it's age, and so age is important. And I was telling Jackie before, I had purchased life insurance for my children. My wife thought I was crazy. But I bought life insurance for my kids when they were 5 years old because of age. It's $7 a month. And if my kids, you know, I wasn't that bright, and my parents didn't give me some of that financial literacy when I was a young man. I, you know, learned it myself. My parents didn't know. I just told you the story. They themselves were making mistakes in financial literacy. So I don't know what my kids would do when they're 30. Would they buy them when they were 60? Would they buy when they were 30? I bought it for them when they were 5. And then the hope is that as they mature into adults, that I would transfer the ownership to them. But I'd give them something that they bought for 7 when they were adults, which potentially could be 10 times more expensive if they waited.
I think that's very interesting. I do have a question too. Let's say a person's birthday is in February, this month, and they are 33. And so you would think they won't be 34 until next February, but until actuaries in the insurance business, you're 34 in August, 6 months before. Then why is that? Do you know?
I don't know exactly that answer, but I do know that some contracts, right, Jackie?
That's right.
Some contracts is they will be issued at the attained age, which is say 33, even though they might be turning 34. And some companies will let you. It's the 6 months. They have this 6-month rule. Look, it's obviously the answer. It's risk. It's the risk that's underwriting. But they allow, some companies allow save the date, that if you're within a certain window, they'll let you roll back the date so that you're a little younger. You're within that grade. Some companies will say, no, you're within 6 months of 34, you're 34.
Yeah.
Some companies would say, well, you're 34 tomorrow, but you're 33 today, and today you're still 33.
Yeah, one of the insurance companies I work for did that. So if a guy was
it's a risk factor thing, right?
Yes.
In August, he'll be 34, and his whole thing, a year hasn't gone by yet.
Right. Exactly.
There are many different types of insurances, like you said, property insurance, marine insurance, in the life insurance business. Just focus in that area. How many types are there? I know there's life, there's health. Any other types, or various things like term, life, then long-term care insurance is now a new added package. Can you explain some of those things?
Do you want me to?
Yeah.
Okay.
Sure.
So, for example, for myself, I have term, I have whole life, and I have a universal life.
Can you explain those three? What's term,
Okay.
what's life, what's universal?
So the reason why I have those 3 for various reasons. So, for example, the term insurance, it's a 20-year term. I took that term insurance out because I knew that I was purchasing a home, and it's a large value So it's over 150,000. So if by chance in the term, that 20-year term, if I should pass, my daughter or whomever I designate my beneficiary, they now have enough money to pay off the home.
Uh-huh.
So that's
Okay.
why I have term insurance. I also have a whole life policy, and that's a fair amount. And then that's going to cover my burial and my final expenses. So if by chance, if I have any taxes or anything that's owed, that's going to cover that. And then I have an IUL, a universal life, index universal life. That one I have as an increasing term because being in this industry, I understand the cost of insurance. And I also wanted to have an income that I wanted to give to myself later on when I retire. So that one allows me to create an income for myself. It also allows me to leave a legacy for my daughter and if I should have grandchildren. And it allows me the thing, which is most important, I think, to cover the cost of inflation. So those are the three that I have in place and how I'm using them. And because at the time when I took them out, I was 20 years younger. So the cost of insurance for me was very affordable.
Now, I understand since you talk about especially the life insurance part, the term you cannot borrow money.
That's right. There's
Life
no cash value in that. It's just for
Right.
the period of time, the term. I'm reading the question in the chat, and the person's asking which one is better, term
Yeah,
or
in fact, I
whole.
saw that because I
Yes,
want to wait till you finish. But there's another person from Chicago, Mr. and Mrs. Stephen Williams. He says, "Greetings, Jackie and Vlad, Ethan from Chicago. He is a life insurance producer and looking forward to tonight's show."
that's
So,
right.
Stephen, if you got any questions from one insurance person to another in this, bring it on too. Okay,
And
good.
I want to kind of add on a little bit to that is this is why it's kind of back to your very first questions. What some of the issues and concerns that people might have with life insurance is strategy. Every day I would get a call and somebody would want to purchase. So term insurance, like Jackie said, is good value. You can purchase a lot of benefits for a fairly modest premium. But a lot of folks purchase term insurance for the wrong reasons. And so Jackie kind of explained the 3 reasons why she bought her policies, because she could have technically done it in one policy, but it wouldn't necessarily meet the needs because very common people will buy term insurance to deal with final expenses. So if you buy, Lloyd, if you bought a 10-year term policy at 40 years old, well, do you think you might be dead at 50? No. And here comes 50 rolls around, you're still alive, your term policy expires, and it happened to my parents. And then I would say, well, you're planning for your final expenses. That could be when you're 90, that could be when you're 100. So you have to buy a whole life policy to cover your final expenses, a small one, like, to cover your final expenses, or a universal policy that's permanent life insurance. So what I find that a lot of people use life insurance, but they always have, for the most part, many people have the wrong strategy associated to the instrument.
Do you think that's because the insurance person selling it hasn't properly explained to the client? Because the average person don't know. They'll hear life insurance, death insurance, that's it. How much is it? And that's probably the long and the short of it for them. Very few people realize the way you as consultants do it, that these policies have tremendous advantage if used properly. Like Jackie saying, she put together a term, a life, and a universal. You would think, well, why do you need all 3? Like you were saying, okay, Ethan, because soon like one will do. But then when she goes into the strategy of it, which I think people need to understand, there's a strategy more than just saying, okay, I got some life insurance and I'm not going to die tomorrow. Listen, all of us are leaving this planet. No one leaves this planet alive. No one. I mean, ever since, Adam and Eve, no one leaves this planet alive. So they should have some kind of instrument, you would think, to offset when that time does arrive for the legacy of their children, their relatives, their parents, or whatever the case is like that. So I think it's interesting. But in the life insurance, health insurance business, how many types are there? Does that make sense?
Jackie and I are the state license that we carry. I'm licensed in multiple states, and so is Jackie, licensed in multiple states. The general license that we carry is life, health, and annuity license. And under the life, products. Obviously, you have your term, you have your whole life, you have universal life, you have your variable life. Those are the four major.
What was that last one that I'm not familiar with?
Variable life.
Variable, right? I got you. I understand.
And then there's a mixture. People also have mortgage life insurance, which is a decreasing term type of mortgage insurance. They have second to die life insurance policy. So, but for the most part, there's four major categories when it comes to life. Now, health. You have your traditional health insurance. Everybody wants their health insurance. In Pennsylvania, we have the Blue Cross, we have the PINI program through the Affordable Care Act. You have short-term, long-term disability. That's health insurance. We have critical illness like heart and cancer. That's supplemental health insurance. You have your long-term care insurance, and that's for people to help with home care aides and nursing home situations. And unfortunately, that is probably, in my professional opinion, the extended healthcare problems post-hospital. It is probably the most draining financial life event that could happen in the healthcare industry. It's not that you can't get a new heart, get a heart procedure cost $1 million. You might have a $5,000 copay deductible with your health insurance. It's that if you have to be under home care supervision because you broke your hip or you had a stroke, you could spend $300,000 in 1 year, and there is no security unless you pick up something called long-term care insurance, which is not a new product. It's just a very confusing product because people think it's health insurance. It'll be covered as a health insurance benefit.
Well,
So there's a lot.
What kind of product is long-term health insurance then? If that's
long-term,
the term, long-term.
Yeah, long-term health insurance is a product that reimburses you in the event that you need help with cognitive impairment or custodial help, which is help with activities of daily life like dressing and bathing. And that service, unfortunately, is not considered health insurance. I like to equate, maybe some of your guests had children in daycare. So me and my wife were working folks, and we couldn't afford to stay home and raise our kids. We had to work to raise our kids, so we put our kids in daycare. Well, daycare is expensive. Having two little kids, my kids are going off to college now, but that's even more expensive. But daycare was pretty expensive. My wife and I had to work. Both of us had to work, two family households working. And what did they do for my kids? They fed my kids. They changed their diapers. They helped them walk. They helped them read. They helped them brush their teeth. They helped them wash their face. But as we get older, unfortunately, we could turn into babies. And
we're babies twice. I've heard that phrase.
We need somebody to help us walk and somebody to help change our diaper. It's a sad conversation, but the reality is that is not health insurance. That is help from an aid, which is not health related. And so unless you're dealing with a health issue, most people receive very limited skilled care services through their health insurance, and then they're really on their own. And maybe one day we'll come back on the show or we'll have a show about it. I have a study that there's about, I could be wrong, Jack, I know, is a number like $200 billion of unpaid benefits of friends and family taking care of their friends and loved ones because it's super expensive to bring in the care into your home or take a family member into a skilled nursing home facility. And so the common census is the family and the friends help. And that's about to a tune of $200 billion of unpaid caregiving help.
Hold up.
$200
billion? $200 billion?
Yes, per year.
And the number of companies that even offer long-term care, there's probably at least 6 to 10 companies throughout the United States that even offer this type of coverage because it is so expensive. And if you think about it, if you look on every corner, there's some form of an assisted living or Alzheimer's dementia ward popping up on every corner because it's one of those things that needs to be dealt with because where folks are living longer and they're aging into it and they have a myriad of health issues.
Yeah, that's probably one of the most important services, solutions, and products I try to educate my clients, my customers on, because it is the one event that you cannot receive help from unless you purchase the insurance. A lot of, we came up, this is maybe about 7, 8, or 9 years ago, I lost count. We came up with the Affordable Care Act law, right? They gave us the marketplace. They gave us a couple of, in Pennsylvania, it's called Penny. So the government went around and said, hey, families need help with hospitalizations and doctors. We came up with a program for them called Affordable Care Act. But if you need help with home attendance or daycare for adults, adult daycare or adult nursing home, unless you have the insurance, your assets are paying for everything. And there's, so that's probably in the healthcare business, probably the most important product that's most people are not aware of, uneducated about. And in many cases, they're not really open-minded because they're scared about that conversation.
Well, that's just like if they're nervous or apprehensive or scared about buying life insurance, they think the very next day they're not going to wake up, but that's not true. I do have just a very interesting question from MW at the bottom of the screen, where they says, how can you explain how lifestyle figures in the cost? Which I think is a great question.
Well, one of the questions on the, as we get into underwriting, it talks about lifestyle. So it talks about risk. So we joked earlier about jumping out of a plane, or if someone jumping out of a plane, if someone does race
Which
car
is a question. It's a question.
That is a question on
life insurance applications. Parachuting.
Are you serious? Do you jump out of airplanes?
No. But that's a question.
That is a question.
Parachuting, hang gliding. That's a question.
Race cars. Is scuba diving one of them?
Scuba diving
is one of them. So they're talking. So they're asking the question of, that's great that you have an adventurous lifestyle. However, the insurance company is assuming the risk. So to answer the question about how does your lifestyle pay into the cost, because they want to make sure, okay, what is the likelihood of risk happening to this individual?
Yeah. And then a part of the lifestyle too, and if I understand the question, it could be the fun aspect of lifestyle, like Jackie mentioned, the racing, the jumping out of the airplanes. But there's also lifestyle, which, I have a lot of personal friends that reach out to me because I've been in a business for a long time, and they're fairly healthy, and then their lifestyle is that they smoke, and I would tell them that that lifestyle, even though you're a healthy person, you're not no major chronic illnesses of any kind, you exercise, you have a adventurous lifestyle, but somehow you still smoke, that risk of that lifestyle increases the premium almost four times. And
if a person smokes,
yes. And what happens instantly? The price. I think one of the first questions was budget. People buy based on budget. I would say, well, your premium, if you were a non-smoker, would be $50. As a smoker, is $400. And what happens? They close up, they turn off, and then they hope that they're not going to die. But we all know that that's not true. So we try to educate them about other solutions. But ultimately, lifestyle could be as active as bungee jumping or parachute. But it also could be the way you live and how you take care of yourself. Insurance companies are for profit, and they will love to insure you and give your family loved ones.
They're in the business of making money.
Yeah, but they're not in the business of taking on too much risk, and so lifestyle does play a role in a fun way, and also in a non-healthy way. Lifestyle can also play a role in how the insurance company rates you. And Lo, you probably know this, that insurance companies has about maybe is it 10 or 12 rating categories. It goes anywhere from select preferred down to rated F, right? F is like, we know F is in school. And because some people, no matter how their lifestyle is, they're still so interested in life insurance, they're willing to pay 10 times the rate just to get it. So, the law prohibits some types of discrimination on, certain things. So there are actuaries and underwriters set certain parameters of how much they're willing to take, whether the person can afford to pay for that risk.
Well, I think it's very dramatic, and it shows you the benefit of taking care of your health and the expense of maintaining an insurance policy. For example, a non-smoker, as you gave as an example, only depending on age and other considerations when you go to a agent like Jackie and Eve. It is you got a non-smoker who is $50, but if you smoke, it's $400. It seemed like that in and of itself would want to make you cut back on smoking or stop altogether. No?
If they care, that person, we don't judge. We don't judge. We're planners. We're advisors. We don't judge. We don't make the decisions. But the life insurance, for the most part, is there to benefit the person, like Jackie said. My daughter and whoever else she designates, and my wife. And when you're planning for someone else, and you're planning for yourself. So the people that decide to quit smoking, that would be smart. As it relates to, the question that you guest had, lifestyle figures into the cost.
And especially if cost is concerned, like Jackie said at the top of the show, I think I would cut smoking dramatically to save and keep that difference of $350 in my pocket versus just give it to the insurance company.
But most commonly, they just don't buy it, Lloyd. That's the biggest issue. They don't buy it because they can't.
Really?
Right.
Because that's a car payment. Right?
That's right.
And that's a vacation down payment, right?
Yeah.
And that people have to weigh out.
The difference.
Maybe I'll die tomorrow. Maybe I'll die in 50 years. I'd rather go on vacation right now or buy a car right now.
Our priorities are so messed up, I swear. But another thing. Okay, we ain't going to get to that.
You know what, Lloyd? I'm going to answer the one question that's in the chat about an ex-smoker.
Here's what I want to do. Before you do that, I put up this lady, Neo. She wanted to she says for children, is it beneficial to purchase term life insurance and renew the term life insurance, or is whole insurance better?
I'm going to answer that one. I would suggest that she get, if she can, if it's in her budget, to get two. So here's for example, when my daughter was in college, I purchased a term insurance policy for her and a whole life policy. And the reason why I purchased a term, because we had student loan debt. And May says, whether you're living or dying, doesn't matter. You still owe this money. So, and I took out a Parent Plus loan. So we're still responsible at the end of the day. So the term insurance covered her to cover if something were to happen during that time period, I was able to pay her student loan debt. In terms of to answer the question, to renew the term, at the end of a term policy, so let's use, for example, if it's $15 today, at the end of the 20-year term, there's going to be a table in your chart. And that chart could go from $20 or $15 to could be $300
or $3,000.
Wow.
So depending upon the face value of the term, that's why you have to have whole life insurance in place as well, because you're buying it for the child, their age and their health at the time that you take out the policy. So if they're young, if they're 10 or 12 years old, and you're buying it then, so the cost of insurance could, let's say, maybe $10. So, and then you're buying it for their age and health today. So if by chance if something were to happen to them along this life, they'll have it for the rest of their life. They'll have it paid up. They'll have cash value. They can take an income from that money if they needed to. So there's so many things that when you have a whole life policy that will open up the door for you versus a term life. So hopefully that answered that question. She said, I want to make sure I understand and clarify if I don't with the term insurance, what happened to this one. So term insurance is term. Just like you pay your cable bill.
It's temporary.
It's temporary.
Term insurance is temporary.
Yeah. It's temporary.
Yeah.
And term insurance is temporary, and it's a good product to have. Like I said, it's part of the strategy. So certainly you could buy it if it's this right strategy. And consulting with an advisor about the strategy is key. Or but term insurance, think of it as temporary. And as you age, which was one of our questions, as you age, the risk to the insurance company is greater. So if your child is 5 today and you buy a term and it renews, you renew it, to Jackie's point, when he's 25, well, two things could occur. We know that it's going to be more expensive because it's age-based. But what we don't know, and this is the unfortunate part about life, and I don't wish it on anybody, there could be some chronic illnesses, there could be some accidents that would prevent the renewal of the insurance. And potentially the child or the adult can be disqualified from future purchases of insurance because of pre-existing conditions. So it's important to buy. Whole life is also called permanent life. It's important to buy some term, like Jackie said, as part of the strategy, but also to hedge your bet to also buy permanent life, because you don't want to bet on yourself dying. You want to bet on yourself planning, but not planning on yourself to die. And so term insurance is a good product, but it's a short-term product.
Now, before Jackie answers that question about the person smoking, you had made a reference to this acronym IUL. What does it mean? Evidently, this young lady understands the Index Universal Life. Can one of you explain that? Because I know you said IUL, and I says, let me ask what that means. I know what it means, but to the layperson who may not know, what does that mean to them?
An Index Universal Life is a whole life policy, builds cash value, and you benefit from the gains of the market. So as long as the stock market, the S&P 500 is performing, you're benefiting from the gains. If by chance, if the market should underperform or go flat, in terms of your cash value and your monies that you've put into it, it just stays level. So that's just one of many benefits of an IUL. You can, with that cash value, you can draw a tax-free income from that if it's set up properly.
Yeah.
Ethan talked a little bit about long-term care, short-term care. There's a rider that you can add on to that policy.
I forgot about riders. Yeah.
Rider that you can add to help fund that long-term care.
Interesting.
So, yeah, I would encourage the person who's interested in that and the strategy with that, whether it be me, whether it be Ethan and I, or get with an advisor and let's talk about what your long-term and short-term goals are, and we can put a strategy in place for you.
Well, I would like to express what this woman just says here. She says she learned early, having buried 2 children.
Oh, sorry.
Yeah.
So sorry.
Yeah. But what she is saying is, to those who are listening, she learned the hard way. She learned through life's experience at the cost of her children.
Right.
And she was probably taught unprepared, because none of us think we all assume we're going to outlive our children. But nowadays, children are going before a lot of parents, okay? And so I think that this is Fly 444. I think this is good that she shared that she's saying, okay, y'all can play around what you want to, but she had to bury 2 of her children. And let me tell you, that must have been in and of itself a mind blower, just to lose your child and then lose 2, and then the expense of burying them because you had not properly prepared, because most people are normally not prepared. They will tell you now that if there's an emergency, most people normally have in cash in their home, maybe $200-$300. That's about it.
Okay. And here's a sad statistic. If someone were to go to GoFundMe, and if you were to search funeral and GoFundMe, there's over 500,000 requests for financial assistance.
Serious?
I am serious. 500,000 requests for assistance. Yes. So,
maybe that statistic alone should encourage people, at least my viewers, to reach out to you guys to say, maybe we need to get an instrument and whatnot. And in fact, here's another one that she also says, why is insurance more expensive for older adults? She says, I would think it would be the other way around. See, I understand because I sold insurance.
Sure.
You want to explain that? One of you?
Well, because insurance is a for-profit, and it's all about life expectancy. So insurance for my child, when I bought insurance for my daughter when she was 5, versus if I would buy insurance for myself, or my dad would purchase insurance at age 80, to the insurance company is the closer you are to death by a life expectancy. Now, an 80-year-old can live until they're 120, and a 5-year-old can die when they're 7. If God forbid, we know that. But the insurance company looks at it more like, what is the risk of a 7-year-old dying tomorrow? Very small, but what's the risk of an 80-year-old dying tomorrow? Very large. What's the life expectancy in this country? 75 years old. right? That's the life
Mhm.
expectancy, an average life expectancy. So,
Mhm.
so to answer your guest question is that the older you are, the riskier you are to the for-profit insurance company that wants to insure you. They want to collect your premiums and not pay out that $100,000 or $50,000, $25,000 claim tomorrow, and that's why it's more expensive. They're basically taking on the risk of insuring an older adult by charging you a higher premium because life expectancy is shorter.
You know what's interesting, what people don't know, insurance companies have the best lawyers in the country.
That's right.
They have the best, the best.
Right.
Okay.
We couldn't do a lot of things. We just happened to be in life and health, Jackie and myself. But we talked about properties and homes and boat insurance. We couldn't do any. We wouldn't be able to do anything without insurance. Even as simple as having a car. We wouldn't be able to drive around without car insurance because one accident could deplete our $30,000 401k at work. Could deplete the $100,000 equity we have in the home that we inherited from our mom. Because one accident, the other person could sue you until you're broke. So it was almost impossible to live our life without insurance in various aspects of our financial literacy across
Yeah.
the country.
It's interesting. When I was in China, if a person hit another person, and I never knew why when you hit, they run right away. Because if you hit that person and you're there, you are responsible for supporting the person you hit for the rest of your life.
Wow.
Yeah. So I understand why they flee the scene. But anyway, this is Fly 444. She was the one talking about the two children. She says, now this health insurance, she don't understand why I have to pay so much each paycheck, especially with so many of us paying into it. I'm hardly ever sick, but pay over $700 a month just for health insurance. That's not her rent. That's not her phone. That's not her food. That's not her transportation. That's not her lunch. That's not shopping. Can you explain that?
Jackie,
Or
I don't. I'm not. The question is good. I'm not sure. Not sure if the guess is that employer health insurance that she's
Is that
paying
private?
for, or
she
is
says
that
health insurance. She says health insurance that she
through
pays.
her employer, or health insurance privately, like through herself, like personal insurance?
I have no idea. But I have a feeling it's coming through her work because she says I have to pay so much each paycheck.
I see.
I assume that's the way she's working.
So that's really boils down to many years ago we went to work for our benefits. We wanted our pensions, we wanted our sick days, our wives to be covered for, our husbands to be covered for, and health insurance many years ago, Lloyd, it was 100% covered by the employer.
Really?
That's the way it used to be. But what was basically has happened to this country, which is one of the questions that I get, is lifestyle. For whatever reason, and again, I'm not talking about the science, but the risk factor is that over the last many decades, we got to be a sicker nation, and it's more expensive to care for someone. And the employers, bottom line, their bottom line is that they just can't afford to hire an employee. And again, your guest seems to be a healthy person, but insurance is not based on that. It's based on the group. She could be the healthiest person in the group, but someone in the group is very sick, and so she's paying the rate of the sick group, and not much she can do unless her employer wants to help out and give more help to their employees. So a lot of things have also happened. This Affordable Care Act law that came out 7 years ago or 8 years ago, which I think is a great law overall. It included many things that people asked for, like no pre-existing conditions, right?
Mm-hmm.
And so I used to get calls before the law, and I would get a call that says, "Hey, Ethan, I want health insurance." Okay, no problem. The company's going to I had a heart attack last year. I said, oh my God, nobody's going to give you health insurance. So under the Affordable Care Act law, that person now could apply and get health insurance. But what did we say earlier? Health insurance is a for-profit. So what happens is that
companies plan to make a profit too.
Under the Affordable Care Act law, the law forced the insurance companies to take on sick people, which is great. A great Great, great, great. So now sick people can never be turned away, and they can have insurance and they can be protected. But the problem with that is that this healthy people and the people that can afford to pay for it are paying the larger premium, unfortunately. So, and that's okay, because we have a social system. We pay for the needy and we help. That's our civil responsibilities, to help and help people who are in need. But that could be one of the reasons this lifestyle has changed so much over the last couple of decades. And the law had forced the insurance companies to take on sick people. Had basically, insurance companies are losing money, health insurance, and how to reap back their premiums is by charging your guest who is healthier, who could afford to pay the premiums. They're charging her more premiums, unfortunately.
And now I can see some of the politics behind just that alone.
Right.
This person asked an interesting question. They says, and you actually answered it about a half hour ago or so, Ethan. It says, at what age should we get insurance on our children? Because this world is very violent now.
So under the law, right, Jackie? What did he say? Newborn. You could be 1 minute old
and have life insurance.
And have life insurance. Yeah.
Wow. Okay.
And you wouldn't think to do that, right, for such a young kid, but so because the insurance are not allowed to say discriminate on age.
True.
So as soon as they're born, you technically, when they have a social security number, I don't remember how long that takes to get. How long does it take to get a social security number?
Yeah, no time. But I will tell you this, though. Jackie made a profound statement to me just a little bit ago, talking about getting the different insurance, one for her daughter just to cover her Sally Mae loan. With millions of students indebted to these institutions, seems like every single one of these students will have a life insurance policy, at least term, to cover it. Or is that me, Jackie? What do you think?
Oh, absolutely. It's a tool that I've put in place, a strategy. I thank my lucky stars for being in this career, because it definitely has opened my eyes to a lot of different things and scenarios. And I'm planning so I can avoid some of the pitfalls. So
you're saying that if anybody out there is on a student loan and they're obligated, especially in this Sally Mae, whether you live or die, you still got to pay that money. It is therefore in their best interest to have some term insurance to cover the outstanding amount. Is that what you and Ethan are saying?
For my personal experience, yes, because I'm the parent and I did a cosign. So if something were to happen to my daughter, we are still on the hook. So it does not go away.
And I'm going through that right now. I mean, Jackie's on the other side of it, and I'm on the front side of it, where my oldest is going to college in September. And just yesterday, she showed me the bill to Penn State, and it's a state college, and I have to co-sign for her, because how is she going to get this loan?
Yep.
Jackie is totally right. We assume our kids' risks. And at the end of the day, we have to plan to protect our families, and that's the thing. And when you plan, just because you plan, it's not 100%. Nothing is ever 100%, but at least when you plan, you strategize, you feel good, and you're doing something to prevent a financial loss. Even though grieving is an emotional loss, but to compound that with a financial loss
on top of it, it's almost
it's overwhelming. It's overwhelming.
Yeah. I have this person here, and they says, I want to make sure I understand clearly. If you don't expire with term insurance, what happens to those funds? Those funds stay with the company because they got term insurance, right?
Yeah. And it's for a period of time.
I'll ask this guest. The question is, it's the same thing. If she owns a car or has a home, or she can pay State Farm. I probably shouldn't be just throwing names out there. I'm just making it up. She could pay her car insurance for 20 years, and if she moves to another state, what happens to those premiums?
Nothing.
Same thing with life insurance. Same thing with any insurance. I hope, and I tell my customers all the time, I hope you never have to file a claim ever, 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 ever.
But just in case, though,
Right.
just in case.
That's right. So, but yeah, to answer her question, that if you don't expire and your term does, that money, it's like that money goes away. It's like renting life insurance. It will expire on its own.
Well, this is another extended question she posed. She said she bought a policy when she was 24. She's 44. It's a whole life. I'm grandfathered in the company, whatever that means. She says, I've been smoke free. My son is grown. I have a policy that's beneficial for my son and granddaughter. It seems like she's handled her business. So what do you?
That looks like just the word whole life show. I would tell her that that's permanent as long as she pays her premiums. Her policy will never expire. And if she actually looks at her statements, I think she might get statements maybe once a year from the whole life company. She would have cash accumulation inside her policy with a tax deferred interest rate that she could borrow against that money if she ever ran into a little financial situation. Or she could, as she gets older, 60, 65, she could even turn off the premiums. I wouldn't say do that without having an advisor review that strategy with her.
Sure.
Turn off the premiums and let the cash that's accumulated in the whole life policy pay for itself.
I need to ask you a question.
Okay.
Since you would think with the advent of so-called the pharmaceutical miracle drugs and all that stuff, you made an interesting statement that says, but the country is getting sicker. You would think with all of this high-tech medicine, big pharma, all these other things, that would be the case. I just think it's very interesting. But I say this to say that there are insurance companies where you got to take tests, blood tests, weight tests, heart, all that stuff. But then there is also, isn't it called easy underwriting, where there are some insurance companies where you don't have to take blood tests or whatever the case is. Is that true, or is that me, Jackie and
It's
Ethan?
true. And the cost of insurance, yes, there are companies that, and we represent one of those companies that no health questions.
You don't need an exam.
No exam necessary, guaranteed acceptance. However, the cost of that insurance is a little bit more higher because you're not asking any health questions.
Interesting.
And the face value that you're going to be, the benefit at the end, the death benefit, is slightly lower than what you would get if you were doing some underwriting. So the insurance company is assuming all of the risk because there's no health questions, guaranteed acceptance. You could have a pre-existing health condition, guaranteed accepted. So
Wow.
Again, the cost of the insurance, it does exist. Guaranteed acceptance does exist, and we represent a company that has that type of product, and they do very well with it.
Now, here's one.
The strategy is what's important.
Yes. And in fact, I've got a person, Steve Williams, out of Chicago. He says when he retired from the city of Chicago, if I wanted to keep the health insurance, it would have cost him $1,600 a month.
Wow.
No. And that's actually more than what, if he retired, I'm not sure if he was of retirement age, which would be 65, or depending upon his age, full retirement, 67, et cetera. But that's more than Medicare.
Yeah, but this is over $16,000 a year just for
$1,600. Wow. A month. Yeah.
It's kind of goes back to the same.
per year.
It goes back to the same question your other guest had. It's the health insurance. There's been some laws that were passed that unfortunately the buck always gets passed down. Okay. And the law was made for good reasons. And I agree with the law that pre-existing conditions shouldn't be a consideration when you want to get health insurance. But somebody's got to pay. And your guest, Stephen Williams, is paying for the luxury for himself or others with pre-existing conditions to have health insurance. And that's the law. Now, Steve Williams, Chicago, there's also, with this law, there's a lot of positive things that came out, and Stephen could probably reach out to an advisor in the area that could help him. He might be able to receive some tax credits through this law because his health insurance is so expensive, and since he's retired, he could be overpaying unless he say, contacted an advisor that can help him with what's called the Affordable Care Act law, which is basically a tax credit. He could investigate that, and his premium could be $1,600 a month, but the tax credit could wipe it all out, depending on his actual income in retirement.
Okay.
Yeah, I've had people that their premiums are $900 a month because they're 62 years old, but because they have very little income, but not too little, right? They're not poor, but they have qualified income. They're paying $50 a month. They received almost a 95% tax credit through the Affordable Care Act law. That's the positive part of the law. And then obviously there's the negative part of it, but there's also that big, huge positive. I have a lot of customers benefiting from that law, and I have a lot of customers that wish that law was never passed.
Hey, what you gonna do?
Right. You can't, because we represent both sides. We just advise, and this gentleman could benefit from talking to an advisor about the Affordable Care Act law. Could help him.
Good. Now this person here, she says, and I think it's an excellent question. How does life insurance works in a trust?
So life insurance on its own is somewhat of a trust by itself. Okay. So, but a trust, typically when you're dealing with the trust, you would want to also have a conversation with an attorney. But since the question relates to life insurance, so a trust is a box. And inside that box, you can have life insurance, you can have real estate, you can have cars, you can have boats, you can have stocks, you can have anything. It's a box of protection, we'll call it that. Okay. And if I understand the question correctly, some people make the beneficiary the trust. And the trust is set up by, let's say your guest, and they could dictate how the trust distributes the life insurance proceeds. Because if you name an individual to as a beneficiary of the life insurance, the beneficiary gets that money and no one else can do anything about it. A lot of people might have a disabled child or estranged family members, or unfortunately family members that are very sick or maybe using substance, but they want to care for them. They don't want them to get the money directly, which a typical beneficiary gets the money directly without probate, without taxes, just comes right to the beneficiary. So a trust acts as a layer of protection so that the deceased, while he's alive or she's alive, can dictate how the trust manages the life insurance proceeds for their beneficiaries. If I understand the question right, do you think, Jackie, that's what?
Yeah.
And I have one last question before I let you go. It's this actually there too, but I'm going to start with this one. This I think is very interesting. If you have time to answer, has COVID impacted whether or not someone can get in coverage on life insurance? I think that's good. Because I read last year a very wealthy man in Spain, he died, and the insurance company failed to acknowledge him because they said he knew some of the negative side effects and he went ahead and took it anyway. And thus far they denied him. That was the insurance company. So that was in Spain. This is America. So
I don't know. I know early on when this COVID just came out, a lot of insurance companies got so scared on issuing new policies to new applicants because they were so scared of COVID, and they put in a lot of different changes temporarily. But I am not aware. I don't know, Jackie. I'm not aware that COVID as a illness is even a question on an application. It is not something that is underwritten. I think they've learned quickly that COVID is not the underlying factor of why people pass away.
Exactly.
And so I don't believe that COVID is an issue.
Right. And I will say that during COVID, we still operated because we were considered essential personnel. So I was still writing business, just like we are streaming right now. I can't tell you the number of clients that I serviced through Zoom.
Mhm.
Or if by chance, if I needed to see Mrs. Jones or Mrs. Jones, I just took my tablet or even my cell phone. And if we needed to sign documents, we did it that way, or DocuSign. So, we were still servicing clients during that time, still essential personnel. In terms of the health factor, if the person did get sick, there's other strategies like guaranteed acceptance that we could offer someone if they had any type of pre-existing health conditions as a result of being sick from COVID.
Well, I'm going to answer this person. They says, I know others have questions. Can you post their contact information? Which is
Absolutely.
what I'm going to do right this
Yeah.
second.
Thank you.
MW. Okay, here we go. So we get this straight. It is Jackie Barrios and B. Ethan, their insurance and retirement advisors. Their contact is info at plan well to live well. I like that. Who came up with that? Who, both of you?
I'm gonna say that Jackie came up with
Yes,
that.
I did.
I think I came up with the number 2.
Well, good. And she is a number 2. She's born on the second day. Her Facebook is Plan Well, Live Well. Their YouTube. Now, your YouTube is getting off the ground this Friday. Please tell me about the premiere, please.
Yeah. So thank you, Lloyd, for having us on your show. And our show premieres this Friday, February the 4th at 9 a.m. So stay tuned. I would encourage everyone.
9 a.m. in the morning.
Eastern
9
a.m. in the
9
morning.
a.m. Eastern
Standard Time. So I would encourage folks now to like, share, and subscribe to the channel. I would encourage folks to click on the bell so when our recorded message posts, then that way you'll be first to view it.
All right, good, good, good. And what happens is I'm just going to post a little something and then I'll be right back to you too. So don't go nowhere because I want to make sure we put this up again.
Okay.
But I do want to let you know, folks. There we go. From my point of view, all righty. Let me tell you what we are having next week. Okay, this is very important. Okay, here's this. With these computers, the thing about live shows, they're really live with me. Warts and all, errors and all.
I was just talking about that today.
What's that?
Being live.
Yeah, it is interesting. And now all of a sudden, there we go. There we go. Let me tell you this. First of all, on Monday, the 8th, February, I'm having Aquarius Maximus. Her mom is Nina Diamond, who is a superb cardiologist. Well, her daughter, Aquarius Maximus, is no slouch either. She's going to be on our show Monday. She's going to be answering your questions. So get those birthdays and those questions in. And then on Monday, you might have known this beautiful lady too, Shanika Marie, excuse me. She has been awesome too. So a lot of people have so next week, give me all your birthdays and everything like that. I do want to let you know that today is the last day. The show is all my online courses are on sale. You see what the retail price is and what you can get it now. So save yourself some money with all this talk of inflation. Just save yourself some money and get it by the way, tonight is the last day it's on sale. So y'all can wait till tomorrow, but you'll get your feelings hurt if you think you can go get this discount. So save yourself some embarrassment. Also, although it says January, my February newsletter is now out. So if you want to get the free newsletter for February, just go to lloyd-strayhorn.com. That's lloyd-strayhorn.com. And I'm glad to say that I now have Numbers in You podcast. All you got to do is go to my website, lloyd-strayhorn.com. Click on podcast. You'll hear Iyanla. You will hear Queen Afua. You will hear all kinds of people up the road. You're going to hear about Jackie and Ethan too. In terms of what they're doing, they'll be on the podcast. But I really have to thank Sister Kimberly Williams. Sister Kimberly Williams, she's been a guest on the show, but she is remarkable in putting the Numbers in You podcast together, and I got to thank her. Now, to get back, and I've got to, Ethan, I got to give this woman her props. This beautiful woman y'all see here, okay? Let me do full screen so y'all know who I'm talking about, okay? This beautiful woman here, one day I was sitting in her house And it was on June the 27th of 1921. And in her house in Philly, she had me sit at her table. She put up her phone, put it on the stand, and said, record.
Let's go.
And that's just what I did. And I went back to New York and I put an outline of the show that wound up being Live with Lloyd. Little in my wildest dream. Thank you, beautiful lady. This is her. I would blame you, but I thank you. I thank you.
Thank
So
you.
Jackie Berrios has been, this is the lady. When you see my show every Monday, every Wednesday, thank this young lady right here, because I wasn't going to do it. Not at all. If you left it up to me, this show would have never come into existence. So, Jackie, I love you so much for that. You obviously had vision that I didn't. So, Ethan, all I can say is, man, you're in good hands. That's all I can tell you, because as a result, now got over 11,000 subscribers, thanks to, and it's also Jackie, also with Jazz in Spain, also created my website too. So my strategy, my photo shoots, everything you see, I give credit to this young lady here. So I just wanted to tell you, Jackie, to your face. That's all. Love you for that.
Thank you. Thank you.
Ethan, I don't know you that well yet, but I'm sure you got some attributes too.
We'll get to know each other over the years.
Good, good. So everybody, I do want to thank you. Hold up. Let me put up that banner again so there is no confusion about how to get in touch with Jackie Berrios and V. Ethan. They are your insurance and retirement advisors. They are good. Believe me, I don't have anybody on this show if they're not good. That's, at least I had that much sense. Okay. So if I got them on the show, that means they're good. And you contact info at plan well to live well. And their Facebook is also Plan Well, Live Well. Their YouTube is Plan Well to Live Well. That's going to be premiering this Friday morning at 9 a.m. on YouTube. All righty. So I'm hoping that people have taken notes of it. And for those of you who bear with me, although I know the kind of format I have and I take birthdays and guests and stuff like that, I also will take parts that we need to know too. And this is very valuable. And only because I've had my experience in selling life insurance and I know what a powerful instrument can be under right circumstances. I thought I would bring these two distinguished guests on. And Jackie, well, I'm very proud you do in the first place. So listen, what do you want from me?
Thank you.
Thank you, Lloyd.
Ethan, thank you. Thank you. Any last advice for the viewers about life insurance, folks? Anything y'all want to suggest, Ethan? Or
Well, I would suggest just have the conversation, good or bad, pros or cons. Have the conversation, get educated, and really it's based on your needs and your strategy, because there are so many distractions, and you really have to know what's best for you. And it's not just about price; it's about the strategy that's best for you, because we can make it affordable. It's about, do you need it? Is it the right thing? So it's just talking. Conversation is what I'm saying. Just talk. Just conversation is important.
well, good. Jackie Berrios, thank you very much for joining us. And Ethan, it's a pleasure. I met you. I met your parents. Give them my best, please. And to you, thank you very, very much. All righty. Everybody, I want y'all to all have a wonderful, wonderful day. You see there at the bottom of the screen is how you get in touch with them for insurance questions. In fact, get some insurance, because they are insured in different states too. I don't know which ones, and more than likely they will probably be in your states. But please make sure you reach out to Jackie and Ethan at Plan Well to Live Well. That's on their Facebook. Everything is right there on the banner. All righty. In the meantime, all of you have a wonderful, wonderful weekend and a safe one at that, since people seem to be acting all out of sorts, for which I don't understand. But anyway, y'all have a nice day. Until then, and to Jackie Berrios and to Ethan, bless you. Thank you so much for bringing such.
Thank you, Lloyd.
The guests like it, and to the guests that answer the questions instead of like, "What's my birthday?" I appreciate that so much, and hopefully your questions help give other people information that probably want to ask questions but never thought about it until they go on. Y'all have a nice day.
Thank you.
Take care.
Not everyone.